I want to talk about the different types of livestock crop insurance, and then Randy's going to give an update on the markets. Just do it like how we usually do it. I pulled this this morning just to show you how much livestock premium is out there. This is nationwide. The green is the LRP. Feeder cattle is $259 million of producer premium in the 2024 crop year. And then swine and fed cattle, that tan is the dairy revenue protection. We're not going to talk about that. The little orange ones are the LGM. We'll talk a little bit about that. That is clearly not nearly as popular as the LRP. And finally, it's that wean calf revenue protection that was a pilot program last year. The rest of those numbers are in millions. The wean calf is really just $23,000 nationwide. So again, I'm going to go over LGM and the wean calf really quickly, and then we'll get more into LRP. Livestock gross margin, like it says, is providing against loss of gross margin for cattle, dairy, and swine. Like LRP, we can do an app anytime. No coverage attaches until you complete that endorsement. LRP has quotes every weekday. LGM only has quotes once a week on Thursdays. And again, what we're looking for on LGM is both the cost of the feed and the price the producer receives when those cattle are sold. There is a deductible you can take up to $150 a head. And this is new for 2025. I think they went back to the old way. They had more variability in LGM, the more customization early in the program, and then they took that away and made it more streamlined, and now we went back to the customization. So now there's two types, calf finishing and yearling finishing, and you can choose now your target corn weight, your target feeder cattle weight, and live cattle weight, which is brand new this year. They changed their expected prices. They used to be off a 3-day average, and now they're just based off the Thursday settlement prices. I think one reason we don't see a lot of LGM is just that LRP is so popular and it's just so easy to get and easy to use. You cannot have an LGM and an LRP policy ensuring the same class of livestock at the same time. So if you had an LGM endorsements that expired in, let's say, May, you couldn't do any LRP until that LGM endorsement had expired. Wean calf revenue protection. This was brand new last year. First time we have an APH plan for cattle. This is going to protect those calves until they're of weaning age, and it's going to be just like revenue protection, corn or soybeans. We'll have an APH, we'll have T yields. For the last 2 years, it's just been a pilot program in those 4 states listed. I assumed after 24, they would really, do some modifying of it and improve things that were problems in 24. But the only change they did make was to extend the calving period from 60 to 90 days. And so, like I said, last year was the first year. And how did that turn out? Not great. 26 policies were sold nationwide. Only 12 of those had premium. Just under 1,700 had insured nationwide. And again, 23,000 in producer premium. I'm confused why we had more sold than had premium, because if you bought it, I would assume you had calves. My guess is that they got caught up in the LRP where they had LRP in place already, maybe on like an unborn, and didn't realize until later that they couldn't do the wean calf. And again, really quickly, it's a revenue protection plan. So you will keep an APH of the weight of the calves year by year, just like anything else. And this is the first time we have other perils covered on a livestock policy besides price. Adverse weather, wildfire, earthquake. All those things are covered. That's the list of what is not covered, because again, it generally has to be a weather-related incident like a snowstorm or something. But that's all I'm going to say about that. It exists. It's out there. We'll have to see if it catches on as we go forward or not. The main thing I want to talk about, which is what we primarily sell, is the LRP. A lot of you guys know how this works already. Again, LRP is just insuring against declining market prices for feeder cattle, fed cattle, and swine. It's nice to use. There's no minimum head. You could book 5 head on an endorsement, or 200 head. It doesn't matter. It is federally subsidized. And again, we have feeder cattle, and basically all you're doing is telling us when you're going to sell those cattle, or when they're going to hit their target weight and what their target weight is. That's really all. And then we run the quotes from that. For the feeders, I did want to point out steers and heifers are separate, and the heifers are discounted, so their coverage price is not as high. They added unborn steers and heifers a couple of years ago. That's been really popular. You can take those up to 599 pounds. And overall on the feeder side, we can go up to 1,000 pounds. On the fed side, the only type is steers and heifers together. So we throw them all together on the fed side. And here we can go from 1,000 pounds up to 1,600 pounds. And again, the process, if you haven't done LRP yet, the process is kind of strange. You can complete an application anytime, unless it's a transfer, then you have to do it at the start of the new crop year. We get quotes every afternoon, usually 2:30ish to 3:30 at the latest. They will be out by 4:30 if they're out at all. Those quotes are good until 8:25 Central the next morning. At 8:25, the program shuts down. We can't do anything until that next set of quotes comes out the next afternoon. It used to be a 9 o'clock ending time, and they changed it to 8:25 last year. So timing is very important on this one. By 8:25 the next morning, after those quotes come out, if you want to book an endorsement, you have to sign it. The agent has to sign it. I have to actually enter the endorsement in the system, and it has to be uploaded. All that has to be done by 8:25. So I would rather do these at 7 o'clock, 8 o'clock at night than come to the office at 8 and try to get these done really quick. I could probably get one in between 8:25, but if I have 5 of them, that's not going to happen. So just be aware of that. We are happy to book them in the evening. This was a little bit of a change this year. We'd never had LRP quotes on a federal holiday, a holiday where the markets were closed. If the quotes for whatever reason didn't come up by 4:30 Central, we wouldn't have them that day. The new thing this year is also on the Fridays that the Cattle on Feed report comes out, we will not have quotes. I don't know why they didn't include the cattle inventory report, because we did have quotes on that day. And then also when the cattle markets are limit up or limit down, the contracts that are limit, they would not have quotes that day. Here's an example. Again, this is what you're picking is when do you intend to market those cattle and what weight will they be? And this one is just showing the highest coverage price for every week. This was for unborn from a couple days ago. And the full quotes look like this. We have many options for each time period. So if that highest price gets a little too pricey for you, too expensive, we could pull back a little bit, have a lower coverage price and lower premium. So this is an example of one we actually just booked a couple days ago on the 4th. This one, what is in red is all we need for to book an LRP. So basically, how many weeks out, what is that end date? In this case, he picked November. How many head are you insuring? what target weight you want them to be at that end date, and then the coverage price. So you follow through on the math on there. 2 days ago, he was insuring unborn calves for $13.81 a head at a cost of $62.38 a head. And here's an example of that paying out. This is a different example. This is actually Randy's example, his cows. He booked some unborn a year ago at $283.78. When his coverage ended in November, the actual ending value was $262. So the difference of that is $21, and you just take the number of head times that target weight times that price, and that's your loss. The premium on this one was $644. So he did make some money on this one. And again, remember, the actual ending value is not what you sell them for. It's the value RMA comes up with. Here's another example. This is actually, again, one of our customers. This is what he did throughout the whole crop year. So he started insuring some steers that were going to be 9 weight in April, and then some heifers would be 875 pounds in April. And then he went and did some fed ones after that. And as you can see, the first 3, the ones that he booked in July and September of 2023, those did pay out. The feds that he booked later in March and April of 2024 did not have losses. And again, here's where these prices come from. On the feeder side, the actual ending values are the CME cash settled commodity index prices for the feeders. And on the Fed side, it's the AMS report listed there. So what happens when we hit that end date? If you don't have a loss, we can run after about a week after they expire. We can run that. We'll send you a form saying, yep, there's no loss. You'll be billed the next month. So if your endorsement ended on February 20th of this month, you would be billed in March. If there is a loss, we'll send you a notice of probable loss form. You'll have to sign off to the statements on there and then provide proof that you did own those cattle. We do all of our LRP through AgriSampo, and this is what their questions look like. So after it's done and you have a loss, they're going to ask, did you own the livestock? Did you sell them prior to 60 days before your end date? And that's fine. Anytime in those 60 days before the end date, you are totally able to sell them. There's no penalty to that. And then was the covered livestock sold by the end date? If it was sold, we'll need proof. If it wasn't sold, you have to certify you did have those cattle and they were marketable at the weight you picked. If the livestock were sold by that end date, you're going to have to basically get your sales receipts, showing you as the seller, the buyer, the date, the weight. If you have less number of head than you booked, or they come in at a lighter weight, your claim payment can be reduced a little bit. So you want to be as accurate as you can be on those numbers. If those livestock were not sold, if you had some calves and decided to keep feeding them, we have to find some other documents. They could be purchase agreements, bills of sale. AgriSampo, again, has been really good to work with the documentation. A lot of them, we just get a letter from a vet or a letter from a banker. We've got like balance sheets where the banker just signs off on it. It's fairly easy to get that documentation. They're, like I said, really good to work with. And new for 2025, if you have fed cattle, they are requiring you provide sales documents, even if you sell them after the end date. And that has to be within 60 days after the end date. You have to have sold them and provide that documentation. Also new for 2025 for AgriSampo, if you're going to insure unborn cattle, you have to have ownership interest in the pregnant cattle. You have to own those cows before you can book the LRP. And so we're going to look for veterinary reports, sales contracts, something basically showing you own those cattle. And under normal circumstances, the number of pregnant cattle could produce the number of unborn cattle you are insuring. And we've been booking unborn. They have not asked for that yet. So I assume they will only ask for that if you do have a loss. And that is all I have. Anybody has any questions, you can stick them in the chat. Anything you want to add in there, Randy?
No, there was one thing, and now I can't remember what it was. For the third-party proof, even a field rep from a sale barn can sign off on that to verify that the cattle are there. So if you've had a field rep come out and look at your calves and kind of give you an idea of what weights, and if you're thinking about selling some, even that works as valid third-party proof.
And Randy has kind of come up with kind of a generic statement too, the verbiage that works, that he can send you if you're going to have a vet or somebody sign off on it. If you haven't looked at LRP, though, in a few years or ever, they have really improved this program. They've increased subsidies the last few years. They've added more quotes every day. Quotes are much more consistent than they used to be. So yeah, if you need quotes, just contact our office and we can get you set up to get quotes sent daily. You're up, Randy.
All right. With that, I guess it'll be my turn. What I'm going to look at going over is kind of the last couple reports that we saw on the cattle side of things from USDA, mainly looking at the cattle inventory report and then the last cattle on feed report, and just kind of look at some broad-based things that have been happening. And then, unfortunately, I do have some charts at the end that we'll kind of look at as well. It kind of shows the volatility that we've seen in the marketplace the last week. Now, some of the nice things that we've been, probably the benefit that we've seen now is that we aren't looking at tariffs, and that is helped a little bit because we have a lot of our beef is exported, especially when you look at what goes to Mexico and to some of the other countries. So it's kind of nice that we don't have tariffs in play to kind of slow down the export side of things. But on the flip side, it also means that they don't have tariffs against us as well. So I mean, it's a double-edged sword. We did see the border open up yesterday. 500 head of cattle crossed over from Mexico, trucked over. I shouldn't say crossed over, but were trucked over, and that kind of put the pressure on the market here a little bit as well. You're also looking at, the last 2 weeks, we've seen volatility increase tremendously in the cattle markets, which is also a sign that this market could be looking at topping. Now, we've got a couple of instances that are playing out that shows that we could see some more pressure come into this marketplace for no other reason than just because it can. And that's something that I think us as producers have to be somewhat cognitive and watch. So it normally doesn't, not all the time do we need a reason for the market to go down. Sometimes it just does that. So, and that's where it leads into my first statement. We have to be compliant. NFA makes us put up a disclaimer saying that there's risk involved in the future, or past performance doesn't mean future results. Past performance is not indicative of the same result. So one of the interesting things that came out of the report was, of course, they also have an opportunity to go back and make revisions. And we did see a revision. Not that USA gets things wrong. It's just that just in case there's a typo and an error or something. But they actually went back and they actually lowered the 23 calf crop significantly by about 30,000 head. So not that makes a big difference, but it just means that we really had less calves than what we thought we were going to have. And we found out about it a year later. This is where it would have been nice to have that semi-annual report in July, which would have been the true up in it. But that report has been kind of taken away from us, and now all we have is the actual the annual cattle inventory report that comes out in January. Now, when you look at how the report came out, this is kind of gives us a synopsis of what we were expecting and what the trade was looking for. All cattle and calves came in. That includes dairy and beef. Came in at 99%. The trade was expecting it at 99%. Beef cows came in at 100%. The expectations were coming in at 99. Dairy cows were at 100. That's what they expected and where they came in. And the calf crop came in at 100%, just about a 1.5% above expectations. But when you look at the numbers, the actual breakdowns of things, it was maybe a little bit friendlier than what that looks like. And looking at those numbers, look at all cattle and calves, we did see a reduction. I believe this is the 1% reduction, and it actually is the lowest number of cattle since 1951. So some of these, it's going to be interesting. I'm going to throw out some dates from a long time ago that shows how small this cattle herd is, but it doesn't. Numbers don't equal production, and that's something that we have to remember. Our cattle herd is a lot different now than what it was a few years back. But looking at it, like I said, all cattle and calves, about a 1% reduction, which was the lowest since 1951. And in Texas saw an improve a little bit higher, but everybody else saw a little bit lower. Now, when you look at it as far as a chart wise, going back to 1950, you can just see how over the last years how much we've reduced it, and it's been 5-6 years where we've seen a declining herd number as far as the cattle are concerned. You have to go back all the way to the 50s before we see anything smaller. So now looking at where we saw less cattle, kind of stands to reason. A lot of it was in the high plains or the desert areas where the little bit drier conditions, the drought continues to be kind of raging in some of these regions, and that kind of kept the cattle herd from increasing. Now, North Dakota, South Dakota, Montana did see a little bit better weather. We did see a little bit of herd expansion or a little bit larger numbers. Texas did as well as they picked up some rains, but for the most part, when you look at the rest of the plains, we did see reductions. And also, we see a lot of cattle in the Delta areas, and most of those states also did see a little bit of a reduction. Now, when you break it down between dairy and beef cows actually saw about a 0.5% decline. Again, for the beef herd, it's actually 0.6%. It's the lowest since 1961. So we continue to see the beef herd continue to drop, which, we've seen that since 2019, and it just continues to steadily go down. It's a little less of a decrease this year than what it was last year, but we're still seeing a decrease. And as far as dairy, they've made a little bit of a recovery, but overall, those numbers are pretty small as well. And when you look at it as far as the beef cow inventory, you can kind of see where the waves go for when we talk about the cattle cycle. And you can see we peaked out that cattle cycle in about 19, and now we're kind of going down as far as numbers are concerned and seeing the market drift off a little bit. As far as the dairy herd, we basically lost most of them by 75, and that's been kind of stagnant, actually, when you look at it from about 1995. We haven't seen much of a change in the size of the dairy herd, which is kind of surprising with the technology that's out there as far as dairy is concerned. What we are seeing, though, in the dairy side of things is a lot more beef on dairy, and that is causing a little bit of increase in some of the feedlot slaughters, and a few more numbers going that direction. That's counting a little bit against what we're seeing in the feedlot. Now, I kind of get sidetracked every once in a while, and today this pulled me aside, and I kind of went down a rabbit hole looking at just the beef cow numbers over the last few years and where we're at. And if you take from 2020 up until 25, well, actually from 23 to 25, from our beef herd dropped in the top 10 states by almost 750,000 head. Overall, we were down about 1.2 million. When you look at it for 20 to 25, that 6-year time frame, we're down just in the top 10 states about 2 million, almost 2.25 million. Overall, about 3.5 million head of cows. That we've seen a dramatic decrease as far as the cow numbers are concerned. Interesting. North Dakota is number 8 on this list. We've actually moved up 2 places since last year. We overtook Kentucky and Florida, but by numbers, these are the top 10 states with cattle. And you can see that Texas is by far the leader. They have almost double than Oklahoma, their next closest. So yeah, Texas is pretty important when you look at it as far as the cattle herd. And when you look at it as far as the chart, is you can see that. But you can see numbers almost decreasing for everybody, well, especially over the last 4 years. But last year we did see a little bit of an increase, like I said, in Texas, also in Oklahoma, Missouri, not so much in Nebraska, South Dakota, Kansas, Montana State about the same. North Dakota did see a small increase, like it shows, but not much. But you can kind of see just where each state is kind of doing over the last 4 years. And then when you look at it as far as heifers, this is probably the one that everybody's been the most interested in looking at, is just what the heifer retention has been, if we're seeing one at all. And right now it is not showing that we are seeing any kind of herd retention or heifer retention. Looking at the numbers as far as they're concerned, for the beef cow, they're down 1%. Beef replacement for heifers is the lowest since 1949. So this is the lowest number of heifers being brought into the herd since 49. So we're not going to look at building that herd up anytime soon. And it is also, what, 1, 2, 3, 4, the fifth straight year that we've seen a decline as far as heifers coming into play. And it's not just in the beef side, it's also in the dairy side. Other heifers are down. That's basically the ones that are going into the feedlots. So everything, the heifers were just down just a little bit overall. Trying to get my mouse just so I can advance. And again, here's actually looking at the beef, the heifer retention, or that are expected to calve, also is seeing a little bit of a decrease. So there's 2 different types of heifers that we talk about: those that are about expected to calve, and the heifer crop that is expected to come into the breeding herd, or at least that is either going to be kept to be brought in as a heifer the following year. And that's where we can kind of see the numbers sway a little bit more than the ones expected to calve. But right now, compared to the previous year, what we were expecting, we're actually seeing less heifers being kept. Most of them were either were put back into the feedlot. And you can see Texas is one that is not seeing a very big as far as heifer retention. We're seeing a little bit more of it in Oklahoma, South Dakota, Kansas. There was a little bit more moisture in those areas, so we were actually seeing a little more heifer retention. Iowa, we did not see much heifer retention as far as North Dakota is concerned. So again, it's pretty interesting to see the dynamics of where the states were that are possibly seeing the heifer retention. And then when you look under, as far as the calves were concerned, steers 500 pounds and over are down 1%. Bulls were down a little over 1%. And then the calf crop under 500 also saw a little bit of a decrease. So we're actually looking at a little less as far as the calf crop is concerned. And that we can kind of see here as it's kind of stabilizing a little bit. Now, total down about 1% or 0.1% from the previous year. Again, on the positive side, it kind of confirms that we are not looking at herd expansion for 25, which likely will push off into as well as into 26. Now, what the USDA is trying to show in this number is basically where all the cow and heifers, the percentage of the slaughter. And right now, you can see that the heifers as part of the slaughter herd is kind of large right now, just at about 35%. And you can see that we're actually seeing cow slaughters actually dropping a little bit and be about 18%. And that's part of this is the reason why we're seeing cull cows prices as high as we are because there's just not a lot of culls coming in, and we're not importing as many cows from other countries. Like we import quite a few of the cull cows out of Canada, out of the Netherlands, and we've seen those numbers drop down quite a bit because of one, they've trimmed their cow herds as well, and then also with Canada trimming a little bit. So we're not seeing as many come into play as far as our cow market, which is helping to push that our prices a little bit. On feed, when we look at those numbers, right now the feedlot basically is seeing a little bit less than the previous year. Actually marketings were down by about 0.3% year over year for the feedlots. Placements were down by about 1.7%. The on-feed number actually stayed fairly constant. I mean, fairly steady. It wasn't much of a change. But part of that reason is because a lot of the cattle were being held in the feedlots longer. So that kind of helped stabilize the number. It was kind of a false number. But it was because the numbers were actually sticking around longer. We were feeding them a little bit longer. You look at the supply of calves, the cattle, they are a little bit tight right now. Every one of the categories, we were seeing a little bit lower as far as the calves available to put in the feedlots. Part of that is due to the fact that we, closed the border with Mexico in the middle of November. On average, we import about 100,000 head of cattle out of Mexico into the U.S. feedlots. And when you looked at the cattle on feed numbers, you could see that it was mainly the southern states that saw the decreases in placements in the feedlot, because that's where most of those Mexican cattle go, is they stay on the border. So right now, with that border opening, I have a feeling we're going to see quite a few head of cattle starting to come. Like I said, they stopped in about the middle of November, and with 100,000 or about 100,000 coming in on a monthly basis, they're roughly about 300,000 less brought in than what was anticipated. Those numbers are likely going to come fairly quick. I would expect that those 300,000 will come to the U.S. in a matter of a short period of time. They're also going to try to push as many as they can in because the potential for tariffs. And if the tariffs go into play in 30 days, and what's that, March 1, I think is the next date that we're looking at for potential tariffs coming into play, a lot of the Mexican producers are going to want to be selling their calves a lot sooner. And, we're going to want to be buying them because we'll then, if you get them before March 1st, then you can avoid that 25% tariff that comes into play. So I do expect that we're going to see a large number of cattle starting to head towards the border. When you look at it on feed, this was actually kind of friendly as far as the numbers were concerned. When you looked at USDA's cattle on feed report that came out in January, on feed came in at 99%. It was actually 1% less than the average trade estimate. Placements, and that goes back to what I was talking about with Mexico not bringing their cattle in, came in at 97%, which is about 3% less than expected. And marketings were as expected. So we were moving the cattle in the feedlot, staying current, but we're placing less. And because of the heifer continuing to be put into the feedlot, we're keeping our on-feed numbers fairly high, and then also feeding them a little bit longer. Heifers actually make up about 40% of the number of cattle in the feedlots, which is the upper end of the historical range. So it shows that it also is another signal that we are not seeing herd expansion, because most of the heifers are continuing to go into, or a lot of them are continuing to go into the feedlot, mainly because of the prices too. When you look at cattle on feed numbers, again, the red dot is where we were in January. The cattle on feed report's a little bit odd because it goes by the number of cattle in the feedlot at the beginning of the month and how many were placed the preceding month and how many were marketed the preceding month. So this actually counted the number of calves that were in the feedlots as of the beginning of the month. And we're kind of just in the middle of the range as far as those numbers. Looking at it as far as placements are concerned, we are actually at the lowest placement number that we've had since 16. So placements continued, and that was the second month in a row that we saw the lowest placements in what is that, the last 5-6 years, so, or almost 10 years. So it continues to that kind of just hints a little bit about just how important those Mexican cattle were to come in. Now we also import in from Canada, but it's not as significant as what we bring in from Mexico. And when you look at marketings, well, we weren't very far off the lows. We were just on. It looks like 23 had a little bit lower marketings, but we continue to stay somewhat current as far as the feedlots are concerned. And here's kind of what I was talking about by the number of imports that come into play. Right now, you can see Canada on a yearly basis, we import, roughly you can say that would be 750 to 800,000 a year out of Canada, but we import about 120,000 out of Mexico, which equals about 1.2 million, excuse me, which equals to about that 100,000 a month. And you can that's about what we've been bringing in from Mexico. Canada's numbers fluctuate a little bit more, but their herd is down a little bit in numbers, so we're actually bringing in a little bit less at this point. Now, when you look at production, like I said, just because the numbers are tight doesn't mean the production isn't there. And this goes back to 2015, which shows just where production was at and how we've steadily climbed the beef production up until 2022. The last couple of years, we've seen quite a bit of a drop because of the tightening of the numbers. And actually, for 2024, beef production was estimated to decline 4+% because of the lower numbers. But actually, when it was all said and done, it came in just a little bit above the previous year. And mainly, that was due to the higher carcass weights that we were keeping the cattle in the feedlots longer, feeding them a little longer, and our carcass weights being a little bit heavier. Steer carcass weights were up about 22% year over year, while we were looking at heifer carcass weights up about 18 pounds year over year. So we did push the animals quite a bit more, and they did gain a little bit more. So that actually did help to basically put production even with where we were at the previous year. Now, for next year, we're looking at a huge drop in the production estimate. Now, the USDA is estimating beef production to come in at that 25.8 billion pounds. It's still very early. We're only 2 months into one full month into the marketing year. So those numbers will continue to be adjusted as we move forward. But right now, we're expecting to see a dramatic drop as far as beef production is concerned for 2025. And here it kind of shows where the carcass weights are. This only goes up until 23. It doesn't show 24s in here, but the number would likely be right up around this 930, somewhere in that area, for where the carcass weights were at. If you look at for steers, like I said, that was up 22 pounds, so that actually would be closer to almost like a 9. Okay, am I back?
Yes, you're back now.
Okay. I don't know what I did, but I didn't do what I should have. That's for sure. So I'm glad I came back in the same spot I kind of stopped. And here's what I mean by you're looking at production and cow inventory. You can see that in about 1977, we started to see things go the opposite directions, where the beef cow inventory was shrinking, but beef production was somewhat staying steady or a little bit higher. So, and a lot of that is doing, better to the better genetics and better feeding programs. So we continue to produce a lot more beef than even with the shorter numbers. Now, when you look at as far as consumption, basically, what the average consumer is eating right now on this one, but we were at about 59.5 pounds per person is what beef consumption was for 2024. For 25, we're expecting it to drop a little bit down to 58 pounds per person. I'll speak for myself. It's not decreasing any. It's probably going to increase a little bit. But overall, some of that is just going to be due to the fact that we're looking at because of the higher price, some of the consumers are pushing back a little bit on beef, going more towards the cheaper meats, which would be pork and which would be poultry. It's really hard when you look at the consumer in the grocery store, and the average housewife is looking at a ribeye steak for $25, $17 a pound, whatever it is, and then looking at a whole pork roast for the same price. Either they're going to feed one or they're going to feed everybody. So it's easy for them to make that decision. And that's the one thing that I think is kind of the concern moving forward. If prices continue to stay as high as they are, that we might start to see a little bit of a pushback from the average consumer. Now, just on an interesting note, I wanted to just see what our trade was. And when you look at whether it is for the U.S., whether it is for Mexico, whether it's for Canada, because we kind of have a little bit of a free range in movement of cattle back and forth. So when you look at the U.S., when this was done for 24, production was estimated for beef at 27 billion. Our imports were at about 4 billion. Our percent of imports that came from Canada was at 35%. For pork, that's 70% of our imports come. So we're importing a lot more pork than we are beef. But when you look at our exports that go to Canada and to Mexico, we're exporting about 20% of our beef, exporting about 45% of our pork. Mexico is a huge buyer of our pork. Chicken falls in there as well, as about 29%. Now, when you look at it for Canada, they import about 595 million pounds. 40% of that comes from the U.S. They import about the same for pork. 86% of that comes from us. Chicken, close to the same as well, and that's about 85%. But their exports, they export 82% of their beef to the U.S., which isn't a big number at 1 billion, and 21% of their pork. So you can see they export quite a bit to us, but when you look at the number, it's not as tremendous. When you look at where Mexico is at, they import about 529 million pounds. 63% of that comes from the U.S. They export 939 million pounds. 92% of that comes to the U.S. So a lot of their beef comes to us to basically as calves and then get finished out. So it's kind of interesting to see these numbers. They also import quite a bit of pork and chicken from the U.S. They're a very large purchaser of products from the U.S. And that's, you look at the balance of trade, we're positive when it comes to beef. We're negative when it comes to the others. So they are, I should say. Now, the concerns we've got going forward, we did hear about one again today. I mean, these are kind of the things that we've been seeing. Of course, the black swans that have hit the cattle market over the last few years, and the dairy buyout, the BSE. I still have nightmares about the BSE at Christmas time. Financial crisis. You can throw that packing plant fire that happened in there as well. COVID-19 was a big one that we took a while to come back on, more on the processing side than anything. But the 2024 Asian flu continues to be one that keeps coming back and bringing us nightmares. Last night or yesterday, a news story broke of another strain of avian flu being found in a cattle herd in Utah, wasn't it? Utah or I can't remember what other state over there. But anyway, and this one is now, it's a different strain than what we're used to, and it's primarily in quite a few of the cattle herds over. Now, primarily it's in the dairies yet, but that's something that could bring a little bit of concerns to the beef industry or to the cattle market, which I think is part of the reason why we saw cattle sell off here a little bit today too, is because of this new BSE or this new avian flu outbreak that we're seeing. And then the other one is the Mexican border. We're starting to see the cattle cross over again, wondering just how long that'll be. And also whether or not they've got the vaccine, if the protocols are in place to be able to prevent that screwworm from coming into the U.S. And the other one will be the tariffs and what can happen with that if they get followed through with, or if that's just been a flash in the pan and over with now. So these are the kind of the big ones that we're watching now as we go forward. The other big one that we have to watch is where is the drought going to fall into play? And this is during 3 stages during this last growing season. Up in the top left, we've got where we were January of 2024, and you can see we had some dry areas. I think if I squint really hard, I can see that moderate drought was in like 35%, and severe drought was close to the same. Things improved dramatically by the middle of the year. But by December 31st, we started to see some drought situations start to appear again, with moderate drought being in about 30%, I think it is, and then severe drought being in a little bit more. So we do still have some dry areas and some drought concerns as far as the U.S. is concerned, primarily where the cattle are, and you can kind of see that overlay in the map. So that's likely part of the reason why we're not seeing as much herd expansion as what was probably thought of that we were going to probably see in July of last year. Now, here probably comes a little bit of the more depressing side of it, is looking at the charts, but we've had a little bit of a pullback in the markets as of late. We peaked out in the March feeder cattle contract at about $280, just shy of that. And now we've dropped down. I think our low came in at close to 223, somewhere in that area. Right now, where we are at about a 30% reduction, or a 30% retracement. So we're at some support lines right now at this 265 area. Now, I don't think that area is going to hold. I'd still look for this thing to break down a little bit. I think we're more destined to see this market trade down to this 255 area. That seems to be a little bit more of a congregation area as far as the chart is concerned. So I wouldn't be surprised to see the market try to get down and test that level. And it likely will happen in a short period of time. Now, to take us down to that level means that we've lost, about $35, which, in the big picture, I mean, it's a lot of money. But in this market, in this environment, it's still just a correction. It doesn't mean that we're changing the uptrend line in the market. It just is a healthy correction as far as the marketplace is concerned. Seasonally, we can see this happen fairly quick. Right now, traditionally, we start to tighten up our supplies, but because of the border opening up and the potential to see quite a few cattle coming across from Mexico, gives me a little bit more of a concern that we could see this little bit of a sell-off come into play. The other part about it is that we've got the managed money, the funds, extremely long cattle right now. And they're looking for an excuse to take some profits off the table or to liquidate. So I would expect that could add a little bit of fuel to the fire and could cause this market to look a little bit more negative than what it really is. Because once they start to liquidate, then they're basically going to be what sets the market for how the market behaves at that point. Now, the calves that are hitting the ground now, Amy talked about looking at unborns. I actually like using the unborns, especially for that October, November timeframe, mainly because seasonally, that's when cattle are also kind of dropping down and hitting some seasonal lows. It's a good time to be, if you're looking at wanting to have some protection on unborn calves or put some on in the calves that haven't been born yet. It's a good place to be putting some of the LRP right now. And that market hasn't been hit as bad. I mean, it's down well off of its highs, which we're up well over that 270 area. But we're sitting around 260. So we're down about, 263 and 261 in that area. So the loss has been a little bit less, but to me, that seems to be a little bit better area to go in to try to hedge this year's calves. Look at doing it for a weaning time frame, and then decide what you want to do with the calves after that point, if you're looking at wanting to finish them out or if you take them to a backgrounding. But I think that's the better route to look at, because you're also hitting like I mentioned, the seasonal time frame of the market when we're looking at lows coming in the fall. April live cattle, live cattle actually, to me, feeder cattle are overvalued right now when you look at compared to the live cattle market. So feeder cattle need to see a little bit of a correction. The cash has been pushing them, and it was kind of a perfect storm for the feeder cattle market. As we had tight supplies, and we had a decent fall, good feed supplies up in the northern regions. Winter wheat areas started getting rain. They needed to get calves to put on their winter wheat pastures to graze out the winter wheat. So we had a perfect storm where everybody came back and tried to buy calves to put into their lots, or to put out in the winter wheat, and then also to feed the background up here. So that really started to push the cash prices for the calves, and started the perfect storm. And cash actually led the futures market higher. Futures have continued to stay at a discount to where the cash has been trading at. Now we're starting to see a little bit more alignment in some of those are concerned. But as far as the live cattle market, I don't expect to see a lot of pressure to come into the live cattle as long as the economy stays somewhat stable or stays somewhat firm. We're not looking at much as far as interest rate reduction at this point. Of course, we saw them left unchanged in the last one. We'll likely see a reduction in the next Fed meeting, and that I think will help a little bit. So that's the economy is going to be the key thing that going forward to look at as far as for the live cattle market. But right now, I wouldn't expect to see that the same kind of break in live cattle as what we would see as far as in the feeder cattle market. And for at this point, I would maybe look for us to maybe get down to a 194 area, but I don't know if the April would go much lower than that. What's interesting is when you look at the weekly chart for live cattle, this is actually a weekly continuation chart. So it basically goes back, I can't remember how many years it goes, but it goes back to 20. So that's 5 years. It actually is the weekly, the April month on a weekly, or the April contract on a weekly basis. So it shows where that goes on a continuation time frame. And extremely nice uptrending line in this market. So, that's actually kind of pretty. That's why I wanted to use it, because you don't see many perfect uptrends like that in the markets like this is. So it does show that we continue to see some decent strength. And this little blip down is just like a correction in the marketplace. We haven't broke anything as far as uptrends at this point. And then when you look at the June, June is where a lot of the, where we could possibly be looking at where a lot of the calves that are being sold now in that 9 weight area start to look at being marketed. This one probably could see a little bit of pressure come into it here yet. But again, I don't think live cattle can see much more of a downward pressure in the big picture. Just because we could start to see a few more numbers come into play in June, it might see a little bit more pressure than what we would see in, say, the April contract. In August, by then I would be expecting that we should be able to start to see things improve a little bit in that one. So I'm kind of confident that the April or the August contract could see a little bit, not much more pressure, but kind of just stabilize and trade more in a sideways trend until we get to see just where the supplies start to come in as far as the feeder cattle market is concerned. I'm not looking for this market to sell off and fall out of bed. I think feeder cattle are due for a little bit of a correction. Like I said, we could see him get down and try to test that 250, 255 area, but that would be about where I would be expecting cattle to go to at this point. Questions, comments, concerns?
If you have questions, you can put them in the chat.
Feel free to throw tomatoes if you want.
One question, book now or wait?
Well, it depends. We got kind of our butts handed to us a little bit today, and I would expect that after I actually did what we did for the week here, live cattle for the week right now, the February's down about $4 for the week. We're down $5.50 in the April. March and April feeder cattle are down about $10 to $10.50. So I would say we should see a rebound, some sort of a profit-taking session tomorrow, a little bit of support, and then I would probably, consider looking at doing something at that point. But I would expect that we should see some strength tomorrow, just because. So I would hold off and I wouldn't book at this point.
Any
But I
other
reserve the
questions
right
out there?
to change my mind.
I just wanted to point out too, when you were talking about booking the unborn on LRP, and then when that expires, you can decide what to do with them. Once that unborn has expired, you can book another LRP endorsement on those cattle.
One thing I forgot to mention, I have I have notes sitting here, and I wasn't quite following them as good as I should have. But just a little bit of a side note, also why we're seeing the beef cow prices so high. Beef cow slaughter is down 19% year over year. Dairy cow slaughter is down about 12% year over year. So we have not seen, and kind of goes to what I was saying earlier, and that is the numbers just haven't been there, and that's why that market is holding up as strong as it is.
Another question on the chat. Do you think we'll see over $2 fats in further months like we saw in the most current?
If the economy continues to hold together and we don't see anything major in that, and not everybody gets fired. I would expect that we should, I think by late summer, early fall, we could start to see those numbers come into play. If we put tariffs against Mexico and to Canada, and we slow down the supply of cattle coming from those areas, it'll happen sooner. But I do think we have a chance to get back up there again. We haven't solved our problem yet. We still have very tight supplies for cattle, and that's going to keep the market from falling out of bed in itself, just because the fundamentals are showing that we just don't have the numbers. If we can keep the demand where it's at, exports have been good, but they've been a little lower this year, or lower in 24 than what we saw in 23. But if we don't disrupt our exports a lot, yeah, we still have a problem when that is tight supplies.
Looks like that's it. Thank you for joining us tonight. Of course, you guys know how to get a hold of us. If you have any other questions, give us a call, text us, email us. Again, thanks for joining us.
Thanks, guys.